All right. We are live. Hello, everybody. Welcome back to another Market Open. Here we go. It is October 24th. It is the last week of October. Let me just tweet out that I am live right now to the world. And we've got a very busy week ahead because we've got earnings. Earnings from all of big tech. Richard, what's up? Cameron, what's up? Jason, Alvarado, what's up? Here we go. It is time. Live Market Open. Here we go. Quarantine Quartet, what's up? Dave does, what's up? Irving, what's up? All right, we've got a very big week ahead. We've got Apple, we've got Meta, we've got Google, we've got Microsoft. We've got pretty much all the companies that actually matter reporting earnings. And it's going to determine a lot of things. Seth Roth, Dan Ripley, what's up? Ari is faded, what's up? It's going to determine a lot of things in terms of what's going on with the overall markets. Let's look at Tesla. Tesla is down 207, down 3% pre-market. I believe some of this stuff has to do with the China stuff that's going on. S&P 376. S&P is actually up, even though Tesla's down, which is very interesting. Palantir, pretty solid at 829. Nothing crazy pre-market. Snapchat down 1.29%. Snapchat, I don't know if anyone owned this stock, but if you did, it's tough, man. It's down more than 30%. It's down 91% from its peak. This is one of those companies that's like, my goodness, like, goodness gracious, it just got absolutely destroyed. Like, I mean, I kind of feel bad for it, but at the end of the day, they increased their daily active users, but they were just not able to increase their monetization. The market did not like that. ARK at 35.85 in the pre-market. Uber 28.05. We're gonna see what happens. We've got obviously very, very big earnings coming up. If we go to Google, Google's at 101.48. We're gonna see how Google performs. You know, Google did $69 billion of revenue last time. Let's see if they're able to pull it up. Ahad, what's up? We have a new Indian Prime Minister. Really? Hold on, let me type that in. India Prime Minister. We have a new one? Really? Modi's not the prime minister anymore? Is that a thing? I didn't even know they were having an election. I feel like I should have known that. Unless you're trolling. Tesla to 180 today. I don't know, man, but Tesla's one of those stocks where it's like it might just go down back to its support. And if it does, I think there's a lot of buyers for Tesla underneath 200, obviously. Lots and lots of people that would love picking up some shares under 250 or under 200. But we're going to see how it follows up. As in the UK has a new Indian prime minister. I was like, India has a new prime minister. That's big news. I would have known that. Q4 promos are live at Home Depot. So do I buy power tools or stocks today? Got to buy stocks. Come on. You always got to buy stocks. I own Google. Yeah. So like Google, we have Google coming up. Let's look at Meta. Meta's at 128.32 pre-market. Obviously, it was at lows of 122. We are going to see if Meta beats earnings. I think Meta is the one I'm the most excited about. Because to be honest, if they have a decrease in daily active users or monthly active users, that means we know that something is taking away other people's attention. And it's not Instagram, WhatsApp, or Facebook. It's going to be probably TikTok, which means investors are going to feel that concern more heavily. If they are not as profitable as they think they could be, it's because the metaverse is taking up concerns. And obviously it's not bringing up profits, which is not the best thing. And well, if they have struggling infrastructure costs like CapEx and overarching costs that are draining or that are harming top line profitability, that means the revenue that they're bringing in from a macro on advertising is just not enough to keep them going. Which is, that's an issue. Netflix almost at $300. Goodness. Now, I actually listened to the Netflix earnings call from investors on Q3. And I tried to get an understanding of where they were going. Look, Reed Hastings and Ted Sarantz, I believe the co-CEOs, they are very optimistic. They are extremely, extremely optimistic of going forward into the future. They believe that they're going to grow massively, and they believe their days of losing subscribers is behind them. So, I mean, the management feels like Netflix is only going to keep growing. I guess it's a question of now communicating that message to all of the people who bought Netflix and are Netflix owners is a shock. But for them to be $280 or $290, I don't know. I don't know if that's a. I'm not buying that, I guess is what I'll say. Primarily because my thesis on Netflix has always remained the same. I just don't think they have the best content. There's some things where you have to investing becomes so personal. It's like it's really hard to just make that decision. Like really hard. YouTube needs to make a Discord style chat for live streams. I think they're actually getting ready to do this. I heard some rumors about this. We'll talk about this after the open. We have about 50 seconds to open, 40 seconds to open. I heard YouTube with creating those handles. If you guys saw those, like you can now customize your own handle. At least if you have a channel, which should be everybody. Then that means they're going to create like Discord level live chats. I just don't know if YouTube is the best place to do all that. I know YouTube wants to be the all-in-one app where you do everything, but there's some places where it's like, I don't know if I want to chat with everyone on YouTube versus on something external like Discord. Maybe not. So we'll see. All right, here we go. October 24th. It's actually Drake's birthday today. If anyone's a Drake fan, it is Drake's birthday. He has a new album coming out on the 28th as well, which is exciting. October 24th, 9:30 a.m. Big week for earnings. The market in the United States of America for stocks is officially open. Wake your ass up if your ass is not awake, and let's see what's going on in the markets. We've got Coinbase 66.92, Google 101.52, Meta dropping massively 126.39. It was at 132 at one point last week. I believe the Snapchat stock is messing with Meta at the end of the day. Apple at 147, AT&T 17, Tesla 206 dropping pretty rapidly, and there may be a couple of reasons for that. We'll talk about S&P going up at 375. Path 1150, Palantir 823 going down just a little bit, but nothing too crazy. SoFi 510, SoFi above $5, not too bad. Thank you to everyone who showed up to the SoFi weekly podcast on Friday as well. Really appreciated those that came for our second episode. It was a fun one, and we got to talk about a lot of stuff. NVIDIA making a little bit of recovery here. Back at 124, it was struggling at 109, went from 119 to 109. Obviously still down massively on the year, but at least it's recovering a bit. And it's not going down even worse. AMD stuck at 57.58. It's not going below that level, or it's struggling to go below that level, but it's also not increasing above that level. So the market's kind of trading it sideways right now. Spotify at $88. Kathy Wood has sold off the last 300 shares of the stock. She no longer owns this position. This is a company she had about $800 million in, and she sold out for a pretty big loss. So Kathy Wood is out of Spotify. Enphase 250, Bitcoin 19.3. Bitcoin also really unchanged. Like if you've noticed, no one's really talking about crypto anymore because the price is just not fluctuating that much. So there's not that much to talk about. But Bitcoin is pretty unhinged as well. Glad you are back. It's been ages. Yes, thank you. Last week was a little rough for me, just from a bunch of angles. So now I am back, and I'm happy to be doing here. Congrats on 15K, Amit. Thank you so much, Aurelio. I appreciate this. 15K was super awesome, and it was nice to see 15,000 people actually subscribed. So that was super dope. Thank you so much. Who remembers mailing back your Netflix DVD? I actually remember this because my mom had a Netflix subscription back in like 2008, 2007. So I remember doing this. Baba getting crushed. Okay, let's go to the Chinese stocks. Baba. Wow. Why is Baba getting crushed? Does anyone have any info on this? And then Neo down 11%. Neo, oh my God, down 13%. What is going? This is, I mean, like as cliche as it is, this is why you just don't buy the Chinese stocks. Like, I know it's cliche, but so is it because that China thing that happened where the President Xi kind of like pseudo escorted the former president outside of the Communist Party Congress meeting? I don't know if you guys have seen this, but basically it would be similar to like Trump and Obama being in the same meeting and Trump having police escort Obama out of the meeting. Imagine it's like a State of the Union address or something. That's the similarity of what happened, as I was told, in the Chinese version of it at their Communist Congress Party meeting. If that's the reason, and maybe investors feel really unconfident behind Chinese companies, that could explain the drop. But there might be other reasons that explain the drop. Markets do not like Xi's third term. Okay, yeah, that's what I was expecting. Do not like Xi's third term. Whew. Okay. Well, that's what it is. Let's go into CNBC. Let's see what they're talking about. I want to see some earnings previews as well and see what people are saying. But yeah, markets must not like President Xi's terms to be able to doing that. Okay, here we go. Let's see what we're talking about when it comes to tech and see going into earnings, since we have earnings coming up. All right.
This week's Stocks to Watch segment is Daniel Flax, Neuberger Berman, Senior Research Analyst. We know about higher interest rates. Dan, that gives us multiple problems. That's why people have talked about tech being problematic, the NASDAQ maybe being more adversely affected by what the Fed's doing. You've got a lot of headwinds that you're bringing up for the results, too. So a lower multiple on slowing earnings growth, too. What are the things that are hurting the results, the actual fundamentals of tech right now?
Good morning, Joe. Besides higher interest rates, of course, there's a little more inflation in the system. There's cyclical headwinds. Let's not forget FX as well, which is really a transitory impact.
Supply chain.
I think supply chain, higher labor, higher fuel costs.
All those
the list goes on. Trade tension, absolutely. I think, though, if we step back and think about what's going on, the companies that are able to invest, to innovate, really to execute on their product cycles through this, I think those companies are going to emerge stronger as we get into next year and really look at the reacceleration of growth late next year and into 2024. So insofar as this week is concerned, we, of course, have Google tomorrow. Core search, I think, is durable. It is slowing in the near term and compares are difficult, but that is a very vibrant asset. There's a lot of innovation there. Microsoft, of course, they are a key partner in helping clients transform their infrastructure to really embrace this digital future. And I'll mention Amazon as well. And as they get back to more and more one-day delivery with Prime, I think that e-commerce business is going to reaccelerate, and Amazon Web Services is a very, very valuable platform to its enterprise customers. So pulling it all together, I think as we look through the balance of this week and certainly into the weeks and months beyond, cloud, e-commerce, and the build out of the digital infrastructure remain healthy, even in the face of what are, of course, some cyclical challenges.
I guess, Dan, what I'm asking is, all stocks get hurt by higher interest rates, so that's a given. What makes tech so attractive in the bull market is it grows more quickly than like legacy companies that we think of.
I want to highlight the point that Joe just made. We've been in an environment for the past 14 years where interest rates were near zero and tech actually developed into an economy. Like in 2008, there wasn't any tech, right? 2005, 2004, there was no tech. This is a relatively new phenomenon as Facebook went public, Apple reformed itself, Microsoft actually became the behemoth that it is. Obviously, Google and Microsoft were around in the early 2000s, but it wasn't at the scale that they were by 2012, 2013, 14. So it's interesting because in a world in which interest rates were low, tech has the ability to infinitely scale and just print money. But now when interest rates are high, the cost of borrowing capital is harder. It is going to be interesting to see how tech is able to perform. Is tech able to still put up those numbers? And are we valuing and giving forward PE ratios to tech companies that really aren't justified in a 4%, 3% interest rate market? I think that's the question that these earnings are going to let us try to understand.
Whether it's consumer products or retailers or whatever else. So in a period like we're in right now, which could be months, it could be quarters, it could even be years, what sets tech apart positively during good times, does that remain a positive in bad times? They still innovate, they still grow more quickly, or does it actually hurt them more? Is it better to go with the staid, consistent sort of legacy companies? Which is it in a sort of a dull period? Tech is good or bad?
Joe, tech is good in my view, even in this period, which is a little bit more challenging. And it's driven, if you look at their R&D, their capital expenditures in the tens of billions of dollars annually for these companies, their ability to both manage costs as we go through this period, but or more importantly, innovate and really push ahead in terms of what their customers will find valuable during this period and after this period, those are really foundational to creating value for all the constituents in their various ecosystems. And so if they're able to do that, I think they're going to create significant shareholder value, which is why I prefer looking for growth opportunities even in this environment. It doesn't mean there aren't challenges, but we think the market ultimately is going to look through it as we get into next year and focus on what comes beyond.
Right, and the NASDAQ's down more than the S&P, for example. So maybe you've already seen a recalibration of what these companies are worth. So your top three in the companies that are reporting this week, Dan, you'd buy any of them on weakness?
I would buy all of them. I would buy all of them this morning. Google, Amazon, and Microsoft. And to your point, Joe, the market has been discounting quite a bit of this. And so what I suspect we'll see in the coming several weeks through earnings is the market will get a sense of what potential downside can be, and then as it looks forward to what the growth the growth that can unfold, I think these stocks can be nice performers, certainly as we get into next year and think about what lies beyond.
Interesting. So comment below if you also would buy Google, Amazon, Microsoft. I'm a little skeptical of just outright buying them. Now, granted, I do think the market has been discounting them a lot. Obviously, we've seen the market have massive levels of discounting. So if the market has been discounting these companies a lot and these companies pull up stellar, like Google put up 69 billion last quarter. If they put up like 75, 80 billion, I mean, it's not a bad quarter. Google Cloud ended up growing like 25% year over year last quarter. It's hard to bet against tech, but it's also a bit scary given, the S&P is what? Right now the S&P is about to hit 380. So like all that talk about the S&P going down to 3,200, now it has to fall even more. Before, when it was like 3,500, it was closer to hitting that theoretical bottom. Now people think it's already capitulated at 350, and that was the bottom. Is that the bottom? I mean, obviously no one knows, but if that's the case and earnings hit it out of the park as we get into midterm season and the market is already baked in 75 bips, we might have a massive rally. That just might happen. Now, granted, every economist under the sun, or at least like some pretty reputable ones, are still saying the Fed is going to have a hard landing because this is not natural. And at the end of the day, all these are bear market rallies, which might be the case. But, it also might not be the case given everything's so oversold. Yep, I would buy them. I'm only buying Google. Yeah, these companies are America. I mean, yeah, these companies are American, but it's also like, are these companies going to be able to put up their numbers? If TikTok gets banned in China, I think Facebook gets banned in America, Facebook moons. I just don't think that's going to happen to TikTok. It's going to be really hard to get rid of it at this point, given how baked in it is. But if it does, I think Facebook gets to own the category around Reels. Does anyone watch YouTube Shorts, by the way? If you have TikTok or YouTube Shorts, do you watch YouTube Shorts or TikTok? Which one do you watch? I am curious because YouTube Shorts for me, to be honest, is not that good. I've never really felt it be that good. Instagram Reels is actually pretty good, but TikTok still is the best when it comes to short form video, in my opinion. So I think that's going to be a big deal. The reason that's important is because Meta's earnings that's going to matter when it comes to discussing that. I'd buy Amazon. Shout out to Shabby Shambles in the chat. Amazon is interesting, man. Let's see how I don't own any Amazon. Let's see how AWS does the sector. Obviously, last sector, they had a second Prime Day, which I heard didn't really go that well or help them too much. But we're going to see. We are definitely going to see where things come up. All right, let's look at this. Here we go. This is some China stuff. This is going to explain why the markets crashed on Baba and Neo. YouTube Shorts sucks. The content sucks. Yeah, I agree. Like YouTube Shorts really just isn't the best.
Well, as you said, the stock market had fallen quite a bit as investors were quite nervous because of what they had heard over the weekend. President Xi is now the most powerful Chinese ruler since founder Chairman Mao. At the Congress over the weekend, President Xi revealed that he had secured a third 5-year term and also had broken precedent for several other things, including not naming a successor. Now, as for his 7-man leadership team, investors need to know that Xi loyalists are in, reformers are out. Xi's number 2 is the man who is the overseer of Shanghai's brutal lockdowns, which has been suggesting to many, including in the market, that the zero COVID policy is not going to meaningfully change anytime soon. Now, Xi's dominance seemed to also include a flex move on one of his predecessors. Ex-President Hu Jintao was abruptly and unceremoniously removed.
This is what you're about to see is when they remove this guy literally from the meeting. So to summarize, he has a new 5-year term. No one's done this in a long time. No one's done this since Mao. And he has loyalists in his party now, not reformers. And this is what he did to the ex-president. Again, this would be similar to Trump removing Obama if it was in America.
From the Congress towards the end, the official media has not been covering this at all. One state reporter tweeted in English, so targeting a foreign audience, that it perhaps is because former President Hu was feeling unwell. However, most people believe that this is, in any case, a signal being sent by President Xi that he has been able to defeat his political rivals and that he has total control over the government.
Eunice, that's what we've been sitting here talking about. I mean, clearly this was done for the cameras. Clearly there's a purpose with this. This was like orchestrated in the way that you saw, you know, the Beijing Olympics opening games kind of orchestrated. They intentionally sent a message.
Yeah, well, it's interesting because this move, when Hu was taken out of the room, came while foreign media were entering the hall. So you know, it was right before, it was kind of in front of the cameras. So that would suggest that either President Xi was doing it to show a foreign audience what was going on, or that he didn't care and wanted Hu out. So there's still a possibility that maybe there was a health reason, though there's a lot of people who don't really believe that. But if that's not the case, the message either way is being sent that President Xi is the one in control.
It's like Mean Girls, kind of watching at the lunch table. Eunice, the drop in stocks, that significant drop, is because I guess if you have just one clear leader, there's not going to be any questions. There's not going to be any openness. And anybody who thought, okay, maybe easier days are coming, probably not the case. Look at those drops.
Yeah, no, that's right. That's right. I think there are a lot of people who are worried about the risks that are associated with one-man rule. Also, many are just worried about what this elevation of Xi really means for the markets and for many in the private sector, because his approach has been state-led, a lot of influence on the private enterprise. He's been pushing the idea that perhaps there's going to be some sort of regulation on what Beijing considers to be excessive wealth accumulation. And then there's the whole zero COVID thing. There's so many people here, even though so many people were hoping that they would see some sort of easing on zero COVID, even though walking around, most people don't believe anything like that is going to happen. But there was hope that there might be some sort of opening. I had a lot of people asking me, oh, so what did they say about zero COVID? It's like, he didn't say anything. You know, and that's been depressing a lot of people because it's just been affecting so many people's lives. Like, personally, I actually know maybe 4 or 5 people who are in quarantine right now, and I don't know anybody who's ever had COVID. So it's like no one has COVID, but
you don't know anyone who's ever had COVID?
Quarantined or locked up.
I can introduce you to some.
No, I don't.
Wow. I mean, that in itself is such a telling statement about.
Not anyone I know.
I think we've all had it.
We have.
Yeah,
Not over there.
Eunice, the clock's ticking on Taiwan too, and maybe it's maybe we did like a daylight savings reset or something too, because that's closer now. You would think time dilation.
Yeah. Well, it was interesting because some other developments that we saw was that he amended the Constitution, so he's established as the core of the party, which we had heard before, but also that Xi Jinping thought is going to be a guiding principle, and that also included his total rejection of Taiwan independence. So that has been suggesting to people that the time frame might be a little bit earlier than previously thought.
So I watched a 60 Minutes interview this weekend on Taiwan, and the party leaders in Taiwan quite literally told 60 Minutes, which is a very big American media show, that it is not a question of when if China invades, it's a question of when. I mean, they are fully expecting China to invade, like absolutely no doubt. They're like, China is going to invade, and they're trying to order as many weapons as they can. They're trying to protect themselves as much as they can. This is going to be a very interesting next 5 years, because it is my opinion that I think China also will invade. The reason I feel, confident at least saying that, and it's not hodgepodge, is because the world is becoming more deglobalized. What President Xi Jinping has done has basically established that he has control. He knows that if he invades Taiwan, as long as he is able to capture their semiconductor business, or worse, even, maybe destroy part of it, but keep the other part, obviously that would send shockwaves to the rest of the world. I think he knows that American companies are greedy enough to not leave China and have their supply chains leave. So just like Russia, Putin knows that countries are not going to stop paying him for oil and gas. So I think there's a lot of tensions there. And I think there's a lot of issues there. Like is Apple going to flip its supply chain overnight if China invades Taiwan? Maybe, but if they don't, what precedent does that set that one of the most valuable companies in the world is not going to leave a dictatorship that just invaded an independent nation? Because they need to keep, paying 75 cents per hour to basically slave labor to make iPhones and Macs and so this is it's going to be incredibly interesting to see if Xi Jinping does it. Taiwan absolutely believe it's coming. I don't think he's going to do it soon, like in the next month or something, but it's not like they're not thinking about it. They obviously are thinking about it. It's just a question of when it happens. Salesforce at 160. Let's go back to Baba and Neo and see how badly they are getting hit. Baba now down 15%. My goodness. Apple stock will plummet if they use Intel. Dr. Sahil Agarwal says, happy Diwali of it. Happy Diwali to you as well. For any of my Indian subscribers who are watching, happy Diwali to you. I hope you all enjoy today and have a great day with your families. Nah, dude, you don't know how Asians work. They won't invade Taiwan. Chinese know that playing the long game is better. I mean, they've been playing the long game for a while. They haven't invaded for a while. And the fact that they haven't acknowledged their independence for a while also is telling, because that means they're getting ready to eventually invade. When is it going to happen? I don't know. I hope it never happens, by the way, because that would be bad for everybody. That would be the worst thing in the world for the entire world, because Taiwan controls a lot of the world just via semiconductors versus Ukraine in the context of Russia. Obviously, Ukraine, Russia is bad, but Taiwan is the center of how the world operates, the chips, your phones, your laptops, everything, cars, right? So that would be pretty rough. Hopefully it does not happen. Meta 125, Snap 759, Google 101, Apple 147. I did not know Snapchat's market cap was still $12 billion. I actually thought them being at 758, their market cap would be like $4 or $5 billion. Their market cap's at $12 billion. And I think they did $4 billion in revenue. So they have a price of sales of 3, something like that. They increased users 19% year over year. But the problem is they just can't monetize. If anyone's ever used Snapchat, it's really hard to watch any ads. Like on YouTube, you get ads all the time. Facebook, you get ads all the time. Snapchat doesn't have a scrolling screen, right? So when it comes to Snapchat, this is how they monetize right here. Let me show you guys. For those who haven't seen it before, is this Discover page. And on this Discover page, if I click something, in the middle of it is where the ad comes in. You see how there's an ad right there from Amazon? But that only happened if I'm scrolling through this Discover page, right? Let's see if we get another ad. Do we get another ad? There we go. Another Amazon ad right there. So in the actual content, like from your friends, which is like the Instagram stuff and TikTok stuff, you don't get ads. I mean, yeah, you don't get ads. But so that's the issue. Whereas in the Discover, you get the ads, but people have to see the Discover stuff, right? They have to care about viewing that stuff. So that's the harder part. That's the issue. All those Insta girls popping on. Those aren't Insta girls. Those are just random Snapchat celebrity influencers or whatever. Pinterest. Pinterest actually shows you ads in the feed, so it's a little bit different. Snapchat, you have to literally scroll through their Discover section. But all right, earnings this week. Thank you so much for everyone for joining. We are going to see what happens. Obviously, I'll be covering all the stocks that release earnings, and we will keep going throughout the week and see how good or how bad it gets. If tech puts up really good earnings, then we might save the stock market until 2023. If they put up bad earnings and the Fed raises interest rates and inflation is bad in November, then we're going to ultimately see what happens. So thank you all for joining. I appreciate you so much. I will see you later throughout the day. And yeah, check out the link in the description. Sign up to my startup. Would really appreciate getting your feedback. Subscribe if you haven't. Happy Diwali to all my Indian subscribers. And I'll see you guys later today. Bye-bye, everybody.